Hello, ladies and gentlemen. Good day and welcome to the show on this Monday, the 21st of June, 2021. Thank you for tuning in. Glad to have you guys here. Now, here's the thing. If you guys watched my show this weekend, you realize now that when gold's really going to turn is going to probably be after the first of the new year. Now, I'm going to say here's the thing again. Here's the thing. What we've had is we've had a mama bear market. The mama bear, from the family of bears, the mama bear was back at when the virus first started. You remember that big bear market we had that the Fed pulled us out of with $2.2 trillion stimulus package? And we've seen this large increase in the market since then. That was the mama bear. Well, just now, we've just had the baby bear. This was the baby bear. This market pullback we've just had. I knew it wouldn't last that long because it's the baby bear. This is the baby bear. Now, what we got coming up is the papa bear. Interestingly enough, I had to pull these pictures up off of the internet, off of Google, and I was doing a Google search for mama bear, baby bear, and papa bear, and I did mama bear first and baby bear, and then I put in papa bear into Google. And I got a surprise when I put in papa bear. I was expecting to see all these cute bear pictures, like mama bear, baby bear, papa bear, and then I seen all these pictures of these big guys in their tidy whities. And I was like, oh my. I was like flabbergasted, a little bit flabbergasted by it. Anyway, what a society we're living in. Anyway, listen. We got the mama bear, baby bear, and papa bear. So papa bear's coming. You're going to say, well, when's papa bear coming? The big one. It's going to be a big one. It's going to have a lot of strength behind it. It's going to have more strength than the mama bear, which came, and you remember that was a pretty bad pullback. The Fed, they're going to think to themselves, hey, we can stop Papa Bear. Papa Bear, when Papa Bear hits 10%, the Fed's going to be sitting back there and they're going to be like, oh, okay, well, it's going to be okay. And they're going to be soothing themselves. And then when it hits 15%, they're going to really start to get worried. And when it hits 20%, they're going to be having panic attacks. It's not going to stop when Papa Bear hits. And when's Papa Bear going to hit? Anywhere from probably January 1st of next year to the end of the second quarter. Somewhere January, February, March, April, May, June, and around July. Along in there, in that 6-month period. That's when Papa Bear's coming. And why is it coming is all these stimulus that we've received during the COVID crisis and everything, they're not wanting to put any more money in the pot, basically. And how long is this money going to last? It's going to last about that long, and the enthusiasm with it in the markets and everything. All this exuberance we've seen. Things that have driven things like Dogecoin up to like 60 cents. That was started as a joke, for crying out loud. And all this malinvestment, I'll call it malinvestment, has all been a product of stimulus. Money printing. But, they're hauling their horns in now. They're figuring, well, okay, the crisis is over. Things are going back to normal. Economy's heating up and they're getting tight. But there's enough liquidity that they've poured into the system to last into next year. Past the New Year's. And it's just like I was telling you guys earlier in my shows. If you've been watching my shows for a while now, I've been saying that we're going to have a good Christmas this year, and we are. Not like last Christmas. It's going to be a great Christmas this year. But look out for the New Year's. Now, here's another thing I wanted to say to you guys before I move into the markets. What we've been seeing is we've been seeing them tear into gold and silver whenever the market drops. Okay, we just witnessed it. Gold and silver are going to move in the opposite direction during the big bear. When the big bear market comes, the big Papa Bear, when Papa Bear comes, gold and silver, they're going to head into it as a safe haven asset. And yeah, they might dump crypto, but they're going to head into gold and silver. They might dump a crypto, they might not. I'm just not exactly sure, but I think they're going to head into gold and silver when the big Papa Bear comes. So we're just going to see it go up as everything else is deflating. After the first of this year, when Basel III is in effect, and everything, and these bullion guys, gold and silver, are going to start to take the rightful positions again. And you want to have them in your portfolio. You're going to have to wait for it. There's still going to be an awful lot of volatility in the gold and silver market till the end of this year. But once the end of this year comes and we move into next year, it's going to be the bull market of all bull markets in precious metals. Okay, listen, guys, let's get into the markets now. Let's open up the charts right here and take a look at what's going on. We're going to start off with the silver price, which is up 7 cents today. 25.86 for silver. Now let's take a look at gold. Gold is 17.74. It's up $10.80 on the day so far for gold. And so gold and silver picking up just a little bit, picking their heels up a little bit now. Let's take a look now at cryptocurrencies. And what we're looking at is a market cap of 1,347 billions. We're looking at a Bitcoin price of 32,587. I'm officially announcing it that now cryptocurrency's in a bear. But this isn't going to last forever. What we're going to see is it'll bottom, and it'll make a bottoming process. You got to understand something about the cryptocurrency markets. They're not like the other markets. They're in hyperdrive. They move about 10 times the speed of the other markets, so they can go through this whole process of like, take gold and silver for instance. It lasts for years. Be in a bear market for years, or in a bull market for many, many years. And it's a slow thing, Whereas cryptocurrency, it can do all this in hyperdrive. I mean, we've been through 2 bull markets since 2017. Okay, and that's just like, what, 4 years. We've been through the whole cycle. The whole cycle completes itself. And that cycle in cryptocurrencies is moving faster and faster. So I hear a lot of them thinking it's going to take like 3-4 years for this cycle, this bear market, bull market cycle to complete in cryptocurrencies. Now, because it's moving faster and faster, it could do it in a year. Complete a whole bear market cycle and be back into a bull market again. It's moving at hyper speed, the cryptocurrency market. You got to take that into consideration. But right now, we've entered into a bear. And of course, you know what comes on the other side of the bear market in cryptos? A bull. So you're going to have to determine to yourself where the lows are when we set bottoms in the cryptos, and when they get ready to turn again and go to the upside again. And the next upside, crypto is going to continue to follow this same pattern it's followed all the way from its beginning. Right now, 32,000 is looking at like a cheap price. Well, there was a time when a cheap price was like 5 cents. And we've went through this cycle over and over and over again. It's going to continue, this cycle, and cryptocurrency is going to go. You'll probably see cryptocurrency go up. It's going to make these massive gains again in the future at some point. The people that's going to make out the best with cryptocurrencies are the people that never let go. They just sit on their positions. They don't try to make money out of it. They just sit on the sidelines, and they suffer through these bears. Like we're in right now. But it's gold and silver's time to shine now, starting January 1st. It's gold and silver's turn. Okay, now let's take a look now at Dow Jones Industrial Average. 33,665. It's up 375 points. This weekend, on my show, I think it was on the Delta Report, I said that I would not be a bit surprised if Monday morning the Dow Jones starts to go back up again. Those are my exact words, because I knew this was the baby bear. This is the baby bear. Look out for Papa Bear. She's coming. And, I'm going to tell you guys what. The Fed's not going to want to intervene with Papa Bear. They're going to stand back and watch it. 10% correction, they're going to stand back and watch it. Hits 20%, their knees are going to be knocking. And they're going to still be standing back there watching. When it gets to about 22, 23, 24%, they're going to take action. And the action is going to come in the form of because of the bond yields are going to have crept up over these months between now and January. The action is going to be to bring the bond yields back down again. It's called yield curve control. They're going to have to instate yield curve control. That's going to be the last straw. It's going to be the last straw, and they're probably doing an injection of money too at the same time. That's when we're going to see this whole thing. That's going to be the last deflationary period. The Papa Bear is going to be the last deflationary period before we go into the hyperinflation. And that's what's going to trigger the hyperinflation is the Papa Bear. Papa Bear is going to trigger the hyperinflation. It's going to be a deflation, a Papa Bear deflationary period. Very short-lived, and it's going to be very, very powerful, and it's going to trigger the hyperinflation. Okay, now let's take a look now at oil. Crude oil's at 72.05 today, and it's up 41 cents, or 0.57%. It's on its way to $80. Here's something we got to watch. Now, I told you guys a few days ago when I saw the change, and it started to break above the trend line, the move index, right? She's off to the races, and she's going up really fast right now. 60.45. This indicates instability in the credit markets when this gets over 80. And this is not like your normal indices, This thing, when it moves fast. When it moves to the upside, it can move awfully fast. It could go right up, shoot right up like a rocket. And what it indicates is instability in the credit markets. And when this thing shoots up, this is when they have to do things like repo operations and things like that to stabilize the credit markets. Bonds and rates today. We're looking at bond yields climbing today. We're looking at the 10-year at 1.485, and it's up 3.4 basis points. This is right in line with what I think is going to happen. I think we're going to see the 10-year slowly creep up toward 2% as we move toward the end of this year. When it gets up, I think it's what's going to trigger the Papa Bear into the new year sometime. Is these bond yields creeping up. And this is what they're going to have to control ultimately in the end. They're going to have to extend their control of yields all the way out to the 30-year. All of it. They're going to have to control it, the Fed. Okay, now the U.S. dollar index. 91.96. So the Papa Bear will be the last rally into the dollar. It will be the last one before dollar crash. And of course, that it's going to have to be very bad magnitude to crash the DXY, because what they're comparing the dollar against. They're comparing it against a basket of crappy currencies. And the biggest part of those crappy currencies is the euro. It makes up like 60% of the US dollar index. So if they were comparing the dollar against maybe something like gold or Bitcoin or something, the dollar would already have crashed. Thank you guys for listening to my show. Like and subscribe, and we'll catch you guys in the very next episode. Bye-bye.